Hello and welcome to the AI Pathfinder for Private Equity podcast. AI Pathfinder helps private equity firms make sense of AI and make it work. It's an expert network built on insight, experience, and connection. We bring the right people and ideas together to turn AI from something you're curious about into something that delivers real results. If you'd like to attend one of my regular AI strategy briefings in London, Manchester, and soon New York, please check out the show notes for details. In this series, I've been speaking with founders who are building focused, high-impact products and services that help private equity firms and their portfolio companies adopt and succeed with AI. Today, we're looking at workflow that sits right at the heart of M&A and private equity, financial due diligence. My guest is Maria Bruun, founder and CEO of Seecon. Before founding Seecon, Maria spent several years at Deloitte working on equity capital markets and M&A transaction services, so she knows this process from the inside. Seecon is still in stealth mode, so we might not be able to share all the secret sauce here, but it's a great opportunity to explore the problem she's trying to solve, who it's for, and how AI might reshape financial due diligence for a PE-backed business. Maria, welcome to the podcast.
Thank you so much.
Great to have you here. Well, look, first of all, quick introduction on yourself and your background would be fantastic, and we'll obviously dig into Seecon as we go through the podcast.
Yes, so Maria, I spent 10 years at Deloitte, 4 years in London doing IPO advisory, and 6 years in Copenhagen doing financial due diligence on M&A transactions. And I'm also a chartered accountant, and I have sit up both on sell side deals and buy side deals in various industries. So it's been very exciting, and now I'm building a tech startup focusing on the financial due diligence. So it's a very exciting journey so far.
Yeah, absolutely, and we've spoken, the two of us, haven't we? And it sounds very exciting, and similar to the other founder conversations I'm having. Those that have that deep knowledge in a particular domain have an advantage for sure. But let's dig into a bit of that background and perhaps the moment or the pattern that made you think that there's part of this due diligence process that needs to change.
Yeah, so I've been sitting doing these deals, for many years, and I think it's just over time experience that a lot of inefficiency. It's a very manual process of gathering the data and thinking, couldn't this be done in a smarter way? When we see how technology and also AI has transformed a lot of other areas, also in the finance industry. So when I stopped in Deloitte and started out as an independent consultant, that was actually my first goal is to help companies prepare for. And then but I still had these kind of thoughts of how can you make this process better. And then I just kind of started doing a simple prototype on on a paper, and just step by step was that kind of evolved into Seecon. And I think it's you see financial due diligence is a process. It has not changed the past 20 years. It's obviously been doing Excel and deliverables on PowerPoint, PDFs, and it's quite a static process. And when you are done with the financial due diligence report, it's already outdated. So if the deal is delayed, you need to update the numbers, and there's a lot of back and forth. So it's definitely a process that can be more efficient.
Has the sort of prevalence of generative AI over the last 3 years, has that given you this sort of belief that it now can change, or have you always felt that there's something a little bit sort of not broken necessarily, but too manual and too laboured?
I definitely feel, I mean, even before AI, that the process could be done better. So when I started Seecon, I actually thought, AI, it's going to take some time to implement it in the platform, and we're going to start with the automation of the financials. But quite quickly, I saw you can actually do quite a lot already, and we already have various different AI built into our workflows. But I was quite surprised of how far you then can get with AI, because obviously with automation, you can automate how you visualize your financials and how you look at net working capital, and you can do a lot of things. But having the AI, it just adds this extra dimension where you can really take things to the next level.
Yeah, absolutely. Could you go into a little bit more detail, perhaps, on where you saw the most sort of painful or inefficient parts of the DD process for the deal teams and the management teams?
Yeah, it's definitely about the data gathering. So when you are doing financial diligence. There'll be a very long request list, and it takes a lot of time to get that data. And I think for as advisors, the customer always spend a lot of time preparing it, and then there are human errors. Maybe they sent the November financials twice and not the December, and there's a lot of back and forth. So it just takes some time to get all the data, and then you have to process it and look at it, and there'll be a lot of follow-up questions and a lot of extra details that you need to get. And I think especially for the company that's going through the process, it's a very confidential process, so typically only the leadership knows, which means it's the CFO who has the responsibility, and they cannot delegate because you cannot really tell anyone because it creates a lot of uncertainty. So they sit late nights and have to extract trial balances, and it's just a very intense process and a lot of detailed work that needs to be done.
So in terms of what the opportunity is then, obviously it's making it more efficient. What else is the potential outcome from making this, or changing I suppose the process, or updating the process?
Yeah, I mean, one thing, obviously the efficiency, but I also think it's like augmenting the process. So with AI and with the automation, you can analyze a lot more data, which a human would not be able to do, and you can focus on like going deeper into the areas that are really important. So I think right now the financial due diligence is quite a standard scope, and there's not a lot of room for a lot of tailoring. Obviously, for the big deals, it's different, but be able for like let's say it's a P company that are the buyer, they're buying a company. Well, they will be able to be okay. We know Seecon like platform that covers this, and we can go into these areas for like revenue or customers. And there's just a lot more time then to analyze, the important areas, the areas that matters most when you come to the negotiation phase.
So is it about removing risk more so, do you think? Eliminating the potential risk that maybe without some sort of augmentation here or efficiency that might be missed?
I think it's hard to. I think that there are different aspects of it. I think, and it also depends on who. Like, are you, if you're a buy side aspect or sell side aspect? So it all depends. But I think, I mean, as the company if you're a company that you want to sell your company, right? I think the biggest risk is that when you are unprepared, you just go. It's the financial due diligence. It's very tough, and even if you have, you're a great company and you do everything great, even the fact that it takes long to get the data, or there are things that maybe you weren't aware of and the buyers are looking into it creates some uncertainty for the buyer as well, and it can impact your valuation. So just being prepared, it actually changes a lot. And I think for the PE teams and the ones I've been talking to, they really want to be able to quickly get the relevant insights to understand, should they like go full into a due diligence. They know the data room opens and they can start analyzing data. So be quickly able to say, okay, there are some risk here that they are too big and we should not proceed with the deal. And just to understand that quickly instead of spending millions on legal due diligence, tech due diligence, commercial and financial. So yeah, so I guess there's different aspects of it.
Yeah.
How you can
And is there a type of deal or sectors where the pain is more acute here?
I think it's I think the mid-market deals are definitely the ones, because it's obviously you have the very large transactions that they need the large due diligence teams for the mid-market, and also smaller deals where you don't need a lot of advisors and you don't need to. I think that's really where you can use a platform like Seecon, and you can get those insights quick, or for like smaller add-on deals, you get those insights very quickly.
Yeah. Okay. That makes sense. Well, look, let's then, take all of that sort of pain and problems that you've seen and experienced firsthand for yourself. How's that shaped then your thinking in terms of what you're building with Seecon and the company that you want to build?
Yeah, I mean, it's deeply, I think, ingrained in my mindset, is that because I'm developing the platform. I have a technical advisor, but I'm actually doing a lot of coding, and it's so exciting to get that vision that's in my mind, to get it out now in the platform that works. But yeah, I'm thinking of like the customer. So what's the most important to them, and obviously what have I seen that I know can make this process better. But it's very important that it's easy to use and it's understandable, and you can get my vision out in the way I want.
Let's dig in a little bit if we can. And look, I'm not asking you to share secrets of your platform. I know it's not officially out there yet, but at a high level, what does automating the financial due diligence process with AI, what does that mean, and which parts of the workflow do you believe can be automated well and which parts stay, firmly in the hands of the human?
Yeah, so with Seeker, I think, well, there are two things. There are this pure automation, and you have the AI, and those things, they work very great together. I think
Hmm.
for the automation, so we built a integration to Economic, which is the leading accounting system here in the Nordics. And we're also gonna add more accounting system. But being able to extract the data directly rather than having all that back and forth and Excel sheets, and you receive the wrong data, it changes. I think it changes everything. And also you get a lot more deeper. Yeah, you get much more detail. You get the journal entries, which means you can actually then having the AI go through a very detailed analysis, finding outliers and do pattern recognition. So I think for the data extraction, the data analysis, the AI works very well. I think what the AI cannot do is give the context to the numbers. So even despite how detailed your numbers are, the AI will say, okay, well, revenue fell last quarter and product A fell more than product B, but it can never say why. You need the context. So you need the human input of, well, what happened in that quarter. And I think this is where the human, you will always need the human in a loop, because to give that context and have that commercial judgment, yeah, at least not yet, can't go into your brain yet and and extract those answers. But it can help, spotting the outliers, preparing a list of questions, and then we can get the context to the numbers and get all the whys.
Well, staying with the human element to this, because obviously the adoption has to be via a human of the platform, and as you described, such a traditional process that hasn't really changed and is obviously often outsourced. Is what so then? How can we break then that the workflow that someone's so traditionally used to? What are you? I'm sure you're having those sort of conversations right now. What brings people on board to say it's now time to change?
Yeah, I think generally, at least the people I talk to, there is a focus on being more efficient and kind of, doing. There's a focus on the value creation in their private equity companies and the portfolio companies. And I think in terms of the adoption, it depends on how you're using the platform. So I kind of see, and I think this is what the pilot projects will also be very helpful in seeing how the platform is used, because I see you can use it on different types of deals. There are the small deals where you can use the platform. Maybe you have bigger deals where you see, okay, there's some areas we still need, the big four to put a stamp on, but we can have all these areas of the scope covered by the platform. So I can see it can be used in several ways. But I think it's very important that it is an easy to use platform, and those insights, you should not spend a lot of time to kind of dig and try to get the information out. I think that's very important, because otherwise, I don't think anyone will use it. So this is the most important thing, is that you really feel that value. You get that almost instantly when you load a new deal into the platform.
Yeah, I've got a background in product, and it's something called the aha moment that is that moment when they see something that is surprising and valuable, and then delivering that obviously over and over again. But it takes something like that for people to sort of switch and think, oh, there maybe is a different process here. But also just in terms of timing as well, even in the 18 months that I've been running this network with private equity, I've seen the initial group of those that were curious within the PE firm through now to it's gone beyond it just being those that were curious to now there's a sense of we all need to be understanding this better and seeing how it can impact both our firm and the portfolio. So it's a real sort of shift, and I sense that obviously going into next year and you landing your product is that timing feels like, well, they'll be ready to adopt, and almost that's mandated rather than it being, oh, this is a little project on the side that the curious person's leading.
Yeah,
Are you
yeah.
feeling the same?
Yeah, definitely, definitely. I definitely feel it's the momentum is is changing, and more people are trying to figure out how to use AI or software to make more processes more efficient. And but it's very important it's done in the right way, and it really, I think it's also that it fits the workflows of the companies that are adopting it, because like just using a channel like ChatGPT, or
Mm.
it doesn't work well. So the people I talk to, they are very focused on that. That is a specific product that works with their processes.
But we know that private equity are risk averse. So trust is a big element to this, isn't it? How can you build that trust where some of the deal team and the partners can stand behind?
Yeah, I mean, things firstly is when we are testing the product. So we are right now in a negotiation with a company that will is going to provide us with like 25 acquisitions of data, so we can use that for testing our AI. So I mean, our whole AI strategy, which we are working on now, is that testing the functions, and so we can like stand behind our statistics when we are going to sell the product. That that this is actually it's a good product, and the insights they are they are right, and there are no hallucinations. Because in financial diligence, it's very important. You cannot have like even a 5% error. So
Mm.
it's very important to us that
Yeah, absolutely. Let's move on to sort of just I suppose the implications really of platforms like that you're building if they're successful. How do you think the experience of being exit ready changes for PE-backed companies over the next few years?
I mean, I think it changes a lot. It goes from you spend 6 months preparing for process to, I mean, our focus is that you can be deal ready from day one, basically. So it eliminates a lot of manual work where management they can focus on the strategy and running the business instead of a long preparation for sell side process. And also that's also one of the very important areas is that it's very hard to focus on running the company while you're in the process, but at the same time it's one of the most important things is that you are meeting your budgets, you're meeting your targets, because when you sit in that negotiation room and you didn't achieve what you set out, you are in a weaker negotiation position with the buyer, right? So being able to shift that, all that manual time and resources to the company, work running in the company, it's yeah, that's going to change a lot. And I also think for smaller companies in general, that being able to prepare for an exit without having spent a lot of money on advisors.
You mentioned the CFO earlier and them feeling, I suppose, a bit isolated. Do you see this as being sort of a tool for them in the main?
Yeah. So for sell side preparation,
Uh,
it's a
uh,
tool for the CFO, and I think it's also useful for because also when you do a financial due diligence, you look like 3 years back, and a lot of times you also see that maybe the company changed the CFO and maybe he or she didn't know what happened in 2000 like 2020 2022 with this number. Or so being able to like having a platform and the AI as well that can help going through all the details. I think it would be very helpful. But yeah, it's definitely a tool for the CFO. And I also see as when you're a PE company that had the platform and you're looking at a target company, it will be also the CFO of that target company who has to upload some data or answer some questions because it is the financial aspect. So when you need that context to the numbers of why things decreased or increased, yeah, this is the person that's relevant to a
yeah,
relevant use.
yeah. Okay. And for that person to get, and others that will benefit from this platform to get the most out of it. And we hear a lot at the moment about why pilots of AI systems are failing because the foundations aren't necessarily in place. And recent surveys of my network is that they feel that they've got the ambition to adopt, but they are worried about, do they have the right sort of plumbing, I suppose, in place to adopt these sort of things. First of all, good to get your perspective on that. But secondly, what could they start doing now to ensure they are as prepared as they can be, whether it's Seecon or other tools that might, come about? What is it that they need to do to be ready?
Yeah, I mean, it's definitely a lot about the data. I think if it's a bad quality, what you put in, you will get the bad quality coming out. So I think for the PE teams, at least in the Seconds aspect, I would say it's you start getting all the deal data from all your historic deals, and look at basically start compiling a database. Because I think no matter if you use Seacon or you use another company or what you're going to end up, you're going to want to big data assets. So being able to leverage that, I think it's going to change a lot.
How? Sorry, go on.
Yeah, that's for the CFOs and PE-backed companies or elsewhere. I would definitely look at your accounting system. I mean, here in Denmark, so you're quite required by law to have a digital bookkeeping system. So all the underlying documentation, everything needs to be digitalized now. And so that's definitely something I would also, as a CFO, and also no matter if you're even in an exit process or not, clean up your accounting data, use a system where you can have everything, gathered in the same place. Because I think a lot
Mm.
of the solutions that will come now also in other areas will be very, very helpful that you have, already have all the data ready. Yeah.
And it's so data is one thing, process and maybe mindset is another. What would your suggestions be there?
In terms of when you're adopting pilots.
Yeah, I think that it's about adopting AI, but in this particular area, what do they need to think about in terms of process? So they've got the data in order, but they might have had a process that they work to that's misfiring for whatever reason, but it's just something that they've used over the years. Is that something that you help them with because you're actually instilling a new process with the platform?
Yeah, I think the first song is to, I think for them and us to very clear on what the goals are and what they want to use the platform for. So I also think maybe I think for starting, with a small deal and then see how it goes, and then you can kind of escalate. But I
Mm.
think with AI, maybe also people, you can have very large expectations of what you wanted to do, and I think maybe that's also why some of the projects fail. Um, is that you have to start, I think, in the smaller steps with the adoption.
They are a competitive group. They want to be able to offer something different from others. How might this differentiate them from their peers?
Already now the deal process, it's the timelines are shorter, and it's a very, very intense process. So when you're a PE company, looking at a target, it will definitely be a big thing that the target management actually had to spend a lot less time on all of their requests versus the other buyers. So I think that's definitely a differentiator. And then in general, just being able to evaluate more deals and also focusing on the areas that are important and the KPIs that are important to that specific deal team. I think that's very like a strong competitive edge. And then also by having all your deal data in one place, being able to compare deals. This is something I just built actually, where you can compare target companies, because otherwise it's kind of hard to, even for companies in the same industry. Maybe you get the data, they classify things differently, or the due diligence report are different setup. So in that way, you can much easier compare targets as well. I think it would be it's a very good strategic tool.
So let's have a little look into the crystal ball future. So your platform is in market. You've got quite a few firms using it, but we're now sort of 3 years ahead, moving to 2030. What might due diligence look like then? What do you see as the sort of vision here?
Yeah, you see a vision that it's a much more smooth and efficient process. That basically you log into the platform, and you can. The vision is that you can get an entire financial due diligence report out of the Seecon platform, and you can benchmark. I think this is a very important tool as well. Benchmark companies against each other, and obviously across anonymized data as well. But being able to see margins and growth, and being more like getting a much more deeper insights on the target company you are looking at.
And in terms of the human in the loop aspect, how do you see that evolving?
Well, that's a good question. I think you just definitely still have to have some human putting in the context, but I could definitely see the platform where the context will come from the CFOs of those target companies that needs to provide the data, but that the AI and the platform, it's so well made that the due diligence findings, they are accurate and they are represented. So through the AI fine tuning and through all the training data, it will be much more. What can I say? Oh, I have no word. But yeah, I think I see the vision is that you can, not that advisors will be completely obsolete, but for like, yeah, I
Mm.
think for the mid-size deals, small deals, or you can have a complete VDD, which is the vendor due diligence report, which is a very even more detailed report that you prepare as a seller. You can fully automate that process. I think that's the
Yeah, and just you mentioned it there around the advisors. Is this a tool that they could somehow use as well?
yes, definitely they can use it. I think right now they are figuring out, because their business model is built on billable hours, right? So I think in general, the big consulting companies are kind of revising that whole business model. But I have already got interest from advisors as well. So it's just kind of where to start, and because I wish I had that tool when I was in Deloitte. So.
Well, absolutely, absolutely. There's a real appetite certainly from my group to see the new tools that are coming onto the market. So perhaps at a future session, we could get a look at the platform and a demonstration, perhaps from one of your first clients. But look, it's been a really fascinating look at how financial due diligence can evolve and what it means for both the deal teams and the companies preparing for exit. Maria, thank you very much.
Thank you so much. It was a pleasure.
Well, for those listening who'd like to follow Seecon's journey, we'll include links to Maria's details and to Seecon in the show notes. But that's it for this episode of AI Pathfinder Private Equity. Thank you for listening, and I'll see you next time.
Thank you so much.